Welcome to a new PE Forum Fireside Chat. Today, we are in Geneva at the Mandarin Oriental, and we have the exclusive pleasure of welcoming Patrick Odier, Chairman of the Supervisory Board of Lombard Odier. Patrick has been at the helm of one of Switzerland's oldest and most respected private banks, a family institution that spans 7 generations since 1796. Over the course of his career, he has witnessed and shaped profound changes in Swiss and global finance. A pioneer and leading voice in sustainability and responsible finance. Patrick serves as president of Swiss Sustainable Finance and Building Bridges. His work bridges finance, policy, and society with the aim of aligning capital with long-term challenges. Today, we'll explore his vision for sustainable finance, his perspective on the future of private markets, and his own personal journey. Patrick, thank you for being with us today.
It's a pleasure.
So I'd like to start with a quote, or paraphrasing you, I would say, because you said that we live in an economic system that has damaged the planet, and you are looking to develop one that heals it, that develops it. So when we look at building bridges, how do you achieve that? And also, how do you measure your impact?
Well, I think we can start by saying that our economic model, globally speaking, has had positive and negative consequences. Science is showing us today how bad are some of those negative consequences on the planet in general, to simplify. This is why, if you look at it from a financial point of view, there's a responsibility for each financial actor to make sure that there's a good understanding about the risks that are basically following or associated with those damages that I'm alluding to. And that has to do with the simple fiduciary responsibility of the financial expert, or with the risk criteria or of the principle when it comes to investing directly. Building Bridges has tried to address this issue from a global perspective, because sustainability or the sustainable transition will not happen just because the financial sector acts differently. It will happen because all stakeholders will combine their forces to address each and every component of that transition. It starts with you and I, as citizens and as consumers. What do we really feel we should do? How should we perhaps adapt or adjust our way to consume? It continues with our way of electing, if we're lucky enough to be able to elect people, or choosing our politicians that will be more or less sensitive to those kinds of issues. It will continue by our curiosity as per how technology can help us in this respect. And finally, of course, it will be important as producers or as industrialists to make sure that we also can bring our contribution, for instance, in changing our processes to this sustainability transition. In order to do that, you need a global dialogue. And capital will be one of the levers, but it's one among many others. Building Bridges has as an aim, as an objective, to make sure that there is a community of interest in this transformation that will work together in order to act as swiftly as possible, but also as competently as possible, after having understood each other's constraints and opportunities. And that's why Building Bridges was created in 2019 here in Switzerland, where we have the luxury of having all the stakeholders united within 60 kilometers in order to make sure that this discussion happens with the right people and right institutions.
And so my follow-up would be is, when you want to measure this dialogue, when you want to measure, how impactful it is, what is the benchmarks that you use? Because it is something that is massive, that demands a change on the global scale. And how do you make sure that it is really impactful.
That's very important because we probably don't need another speaking platform or discussion platform only. We need a place where the right priorities can be addressed. So first and foremost, the agenda is correctly set. And second, a place where the tools, the competences, the resources, the willingness is there in order to push the issues that are identified as priorities a step further. So we have as a goal, as a convening platform and community, to make sure that our community takes initiatives. And if you look at the last 6 years, there's been a number of initiatives that have been taken, if not because of the encouragement that such discussions give to some of these parties prenantes, if you wish, to progress. And so we've seen, for instance, Building Bridges being in a position to attract here the launch of the European framework of the TNFD, which is the nature-related framework in which we all want to pursue our activities with some benchmarks in time. We've seen these kinds of organizations coming to Building Bridges because they felt that this was a right place to communicate the objectives and the means to achieve those objectives, multiply during the recent years. We had also the pleasure last year to have the UNEP FI with us, which combined forces to address some of the critical issues relating, for instance, to voluntary initiatives and other aspects of combining all the financial actors together to make sure that together the forces could be demultiplied. So I would say that our first KPI in this respect is make sure that our community continues to be creative enough to push the agenda in the right directions based on what has been discussed the previous time and in preparation for the next time. So there's a continuity element that we monitor, and that continuity element has also to do with the ability to have not necessarily public discussions, but also closed-door discussions. Meaning sometimes in every country, every jurisdictions, there's a contradiction or a difficulty between, let's say, the regulator and the industry, in whatever industry. These are typically issues when it comes to sustainability that should be addressed earlier or sooner rather than later in order to gain traction. And that's where also Building Bridges can have an influence by convening these discussions, perhaps in a way that creates a trust atmosphere that makes it possible to adjust a legal framework or regulatory framework in the right rather than the wrong direction.
You mentioned that Geneva is a good place for the dialogue, for this dialogue. Switzerland, with its neutrality, do you think that this is important as well?
I think Switzerland is ideally positioned because of the presence in Switzerland of most, if not all, international organizations, standard setting organizations, scientific organizations, think of Nature and things alike, but also because of its combined forces in industries that are extremely central to this discussion of sustainability, and in the financial sector where Switzerland remains one of the main financial centers in the world. So the combination, if you add civil society and this tradition of dialogue with our authorities, is very positive. Now the idea of neutrality is interesting. You're right to mention it. Switzerland has typically been the places where multilateral developments have been discussed. This has been a long tradition, in as much as humanitarian thought has been attracting lots of expertise to Switzerland. We think that we have the same sort of positive framework and setup in order to make this sustainability thinking process develop and flourish in a positive way out of Switzerland, thanks to this tradition of also neutrality in the sense of respecting all points of views and projecting to the outside of our frontier this idea of willing to do good for the rest of the community and not only for us. Now, there's an interesting second aspect to neutrality in this respect, is that neutrality creates also a sort of a good understanding between the various cultures within our own country, which cultures which are, as you know, the reflections of much wider and larger cultural universes. The German culture does not resemble necessarily the Latin cultures in all aspects, in sustainability as well. Same thing with science in general, where science has been attracted to Switzerland because there's a freedom of reflection that allows, especially in today's circumstances, research to dig into issues that could, in some other jurisdictions, be more difficult to look into. So Switzerland has, because of that neutral approach, at least from that positive a priori on how we could investigate in all directions without having too much limitation, has attracted, I think, sympathy for this process to happen also in Switzerland.
And when you try to push this agenda, especially when you talk about finance or businesses, a lot of the stakeholders from that side will tell you that, well, I'm not willing to trade off, the competitiveness of my company or of my investments for, a sustainability theme. Do you think these are valid remarks, or do you think it's a bit exaggerated today?
There's a number of misunderstandings, I think, that should be corrected. First and foremost, we're not here in a moral journey. I mean, we can't, as financial actors and responsible investors, we just have to make sure that whatever decision we make has ultimately an objective of a positive risk-adjusted excess return. If we don't have this approach, which goes through basically an investment conviction, I think we're doomed to have much difficulties in addressing sustainability. So I think sustainability and return should not be opposed. It's the same thing for citizens as it is for investors. You cannot be in a city which suddenly finds itself suffering for wave heats and at the same time preventing citizens in that city to protect themselves against those wave heat, because they will not understand why they should invest in protecting an environment while at the same time not being protected themselves against those consequences. And this is an interesting debate that is happening worldwide today. Think of increasing CO2 taxes and things like this. Is this to the benefit or to, again, an additional constraint to society? This is a debate that has to happen. So from an investment point of view, there shouldn't be a trade-off. What is what is sustainability interesting as an investment is financially interesting, because the world will have to be sustainable one way or another, or more sustainable than today. And I think what it is about is really about understanding the impact of what we're living through today, as illustrated by science and facts, on, for instance, the well-being of society, but also on the financials of companies in which we want to invest. So putting, if you wish, climate and or nature and or social stability into the balance sheet and or the P&L of the company is of the essence from an investment point of view. How much does that influence the future return of an investment into such company will depend on the right pricing of what will be the impact of those trends on the company's financials.
And so if we continue on that line of thought, when you see, family and family offices that deploy capital, how much do you think they are aware of this point, and how much do they are keen in investing in innovative solutions for the climate or for sustainability in general?
I think there's a strong appetite for better understanding these universes of investment, or those universes of investments that have been created by the technology in the field of sustainable or sustainability in general. This basically field of research and technology innovation has basically to do with making sure that each and every sector of activity, the 170 or 80 sectors of activity, industries if you wish, in the world, understand where is the transformation reachable at best, and what will be the conditions of success for those industries to survive perhaps changes of circumstances which will be either natural, coming from the climate itself, or that will be linked to more pressure coming from the regulator, coming from their own employees, coming from their clients, and coming from their investors. So I think there it is absolutely clear again that there will be a possible investment in sustainability only if there's a good understanding on how does that lead to a financially rewarding proposal. If not, I think we should look at philanthropy, but not at investments. And the bridges between philanthropy and investments are being constructed, and I think one can facilitate the other. But I think we should not oppose return and sustainability when it comes to investment. We should add them.
And within these efforts that you are doing, where do you see the biggest challenge? Who is it speaking and bringing stakeholders to understand the same language, or is it applying and executing on projects?
Well, executing on projects remains a key success factor for whatever investment proposal you may have. I think what is interesting today is to sense that the notion of sustainability has become embedded in a much wider scope of investment thinking processes, whether it comes from savers at the retail levels or larger investors, even very big institutional investors. I think this notion of sustainability as a criteria for investing has now been integrated into the regular thinking process. It doesn't mean that there will be always a predominance of sustainability factor in the investment decision, but at least it means that it is one of the key ingredients for the financial decisions that will be taken into consideration when making that decision. And I think in this respect, it's very interesting to see that the very big pension funds, wealth funds, etc., as much as the corporate investors, because mind you, it's not only the financial sector that provides this capital that is necessary for the transformation. It's also, and sometimes foremost, the corporate sector that will do it by its capex investments. I think these criteria have been embedded. I always say that from a financial sector, it's a bit like interest rates, evolutions, and or inflation. If you want to make an investment, I think it's clear for everyone that you have to integrate those kinds of criteria into the decision-making process. Well, today you can add sustainability.
If Lombard Odier is a seventh generation family operation, if you will, since 1796. Each generation has to make important decisions. Do you think that for you, because you've been a pioneer in everything that is related to sustainability, do you think that for you this was the key element or key decision?
Well, being a family-rooted company, Lombard Odier has had this tradition of having an eye and an ear on the community well-being in general. This is linked to the notion of the human factor predominating a company's endeavor, such as in a family business. And I think it's true everywhere, and it's true in finance also. It so happens that we have had a long history of examples where the company has been faced, or its partners have been faced with decision linked to sustainability, starting in the middle of the 19th century, going to the United States of the time, where some business models were judged as being less sustainable than others. But it has been true that while sustainability has been more recently embedded into our investment processes, it's been already for, I would say, quite over a generation. Okay. We really started, well, it's over a generation depending on how you count of it, but we started in the late 80s, early 90s, looking at this very seriously, again, from an analytical point of view, when it came to equity investing first, and then little by little in other asset classes. The second big transformation at our generation that has to be mastered is, of course, the digital transformation. So sustainability is one, digital is another, and there are a few others like, mastering also those elements through the different asset classes, including private assets.
And we live in a very fast-paced, evolving world. What do you imagine the next generation will be have as priorities?
I think if I may go back to your previous question, I think the next gen will be more sensitive to what we just discussed, of course. And I think it is already. You can see it by way of counting the proportion of innovations that comes from the young generation going in the directions of more sustainable models. And that's very good news because it increases the universe of investment that is available to all of us. The way we execute that transformation still depends partially on our own generation or the today's generation in command. And I think this combination, intergenerational effort, is of the essence as well. That's why firms like Lombard insist a lot on that intergenerational combination of strengths, innovative sensitivity towards sustainability on one hand, capacity to execute and understand the constraints of investing correctly long-term in this direction. So I think this is one. The second aspect of the new generation is the mastering of technology in general and the digital transformation that is needed to make sure that the choices of decisions or the criteria for the decisions are optimized given the availability of information that we have today. And the third is to make sure that differentiation is being provided by, in particular, the financial industry, and that standardization, if you wish, is being resisted. Today, I think the next gen is willing to hear about how is your proposal, investment proposal and approach and strategy different from the mass and the general proposal that is available, and why is that conducive to better risk-adjusted performances. But it also is a generation that will be quite stringent in the results and quite stringent in asking for bespoke strategies and perhaps services. So you have to be managing also this ability to distinguish yourself from one type of client to another, depending on the good understanding of the framework within which this client is operating. So it is a delicate balance between making sure that you have investment proposals that could apply to the widest audience and make sure that do perform at best or at least on average better than the average. And second, how do you apply these approaches in terms of investment strategies and criteria differently depending on the different environment, jurisdictions, culture of your clients and of course of their industries and preferences.
There's a lingering discussion about, in the finance world that is much more global, of over-regulation and more difficult way of operating in the West, in Europe, and in Switzerland, and that this puts financial institution, let's say in Switzerland, at the disadvantage of others in other markets that are perhaps growing faster. Do you agree with that point of view?
Not completely, no, because I think that if you look at the wealth management industry in our country, we've gone through, if you take Lombard, we've gone through over 40 crises, and the financial sector went, generally speaking, over 2 or 3 major crises in the last 25 years, that at least, and that has led in our country, for instance, to the wealth management market share to increase relative to the rest of the world. So it means there must be something right. And I think the something right is probably linked to the values through which this profession is being executed in Switzerland. One of them being the service orientation. Again, going back to the bespoke aspect, the industry, contrary to perhaps some other jurisdictions, is less product oriented than it is service oriented. This means a lot. It means a lot. It means that your attitude as a financial expert in this country will really be geared towards listening correctly to the needs and circumstances of your clients before it will be geared towards selling more products to increase potentially your sources of remuneration at the end of the year. And I think that has to do also with a regulatory environment which is being balanced. You see, regulation is easily criticized, but I think what is more important than more or less regulation is the right regulation. There's never as good regulation as the goal of the regulation has been set. And that's what we are capable of doing in Switzerland. Define the goal of regulation correctly will contribute to balanced regulation. And how do you define that goal? By a dialogue between your regulator and the industry. And that dialogue should not suffer from any compromise with regard to the safety and of course, the stability of the financial system and the protection of investors. But I think in this respect, Switzerland has a huge advantages of being able to be small enough to be able to discuss with its regulator and perhaps be prudent in not implementing too quickly new regulations before the rest of the world has perhaps shown where are the pitfalls of some of the directions in which the rest of the world is going, and where are the true advantages of some good regulations elsewhere.
And to continue on, the wealth management topic, there's been a convergence between, wealth management and private capital, a larger interest from family offices and high net worth individuals to invest directly or invest in private equity. Do you think that there is still a big change to come in this convergence?
Yes, I think private assets for many of the wealth management investors has just started to become an important asset class. It's been true for the larger institutional clients for a long time already, of course, for wealth funds, etc., pension funds in general, also multinational treasuries, perhaps in some respect. But I think that for the wealth management industry, there are a few elements that do concur in favor of private assets. First, the economy in general tends to develop more on the private side than on the public side. Mm-hmm. I'm not talking about performances in some sectors increasing the financial value of some investment, but I'm talking about genuine investment developments happen in the private market universes, perhaps faster than in the public sector. This is linked to many aspects. It has to do with, of course, the volatility of the market and the preference for investors not to be suffering from that. It has to do with the fact that there's also lots of constraints in being publicly quoted or listed, etc., etc. So the freedom of investments has happened in these private assets categories and asset classes, and I think it will continue. Second, I think the professionalization, i.e. the expertise that has been developed in the private asset universes has been second to none in terms of development in the last 20 years. The specialization in very specific investment segments has been allowing very different interests to be much more focusing on what is of genuine interest for the investor than it was in the past. And I think that's also very positive. And last but not least, much of what we just discussed about this transformation of the economic models at the sectorial and company level is happening through private assets development. I mean, infrastructure development, real estate infrastructure, mobility infrastructure, telecommunication infrastructure, you name it, digital infrastructure. All this happens first and perhaps foremost through corporate and financial developments that use those private asset markets as the first conduit for their investments before, of course, reaching the public markets. So there's I'm very optimistic about the development of the private markets. We have in Switzerland, of course, looked at it very seriously for a number of years already, because the traditions of wealth management is so developed for nearly 2 centuries in our country that it was normal to see perhaps an initiation of those movements take place in Switzerland rather than anywhere else, as it was the case for also sustainable investments. Mm-hmm. I mean, if I go back quickly as a parenthesis to innovation in the financial sector, Switzerland was the birthplace of microcredit, perhaps of blended finance and impact finance today. Mm-hmm. It's one of the largest markets in this respect, whereas impact finance is not necessarily completely mainstream. So it means that in private assets, we also have a lot of innovation. Some of the Swiss-based private asset group are some of the leaders in the world. And I think this has helped our industry to master this new universe of investment quite properly.
To continue on what you were saying about the innovation that happens in Switzerland, there's also a lot of discussions around democratizing access to private equity through platform, through tokenizations. And there's a debate. Some people say that, well, no, retail investors should not have access. This is not healthy for the business. And others say no, they can achieve some returns or have access. where do you stand on that point?
Well, I think you have to make the difference between retail and non-retail investors simply because the risk tolerance is not the same for those and for those other investors. And the professional approach to managing and preserving wealth and perhaps transferring wealth has first and foremost to do with managing properly the risks. And this is why one of the risks, which is the illiquidity risk, has to be managed as well properly. Doesn't mean that the performance risk is higher. And actually, there are ways of convincing us all that actually, if you look at the past returns in private assets investments, returns are adjusted for risk, are perfectly compatible with lower risk types of profile. The problem is more on the liquidity side and on the obligation for some of those more retail-oriented investors to be more liquid than perhaps other types of investors. So I don't think that all types of asset classes are applicable to all types of investors, but I think the lessons learned through, because of the professional aspects linked to it, managing correctly private assets, which has to do with different types of skills than the ones for public assets, will be very useful ultimately for all kinds and nature of investors, because it will simply professionalize again a further step the profession of or the sector of the asset and wealth management industry that is interested in these kinds of investment.
And so, how do you see Switzerland positioning itself, as a global hub or an innovation hub to attract more investment within the private markets?
Well, again, you have to be performing. That's the first condition. Without performance, clients have ample latitude to choose any other jurisdiction. So I think we have at all time to be conscious of the results to be achieved. Second, you have to anticipate what are the key ingredients for right investment decisions, and perhaps there to be a step ahead. Hence, for instance, my positive inclinations with regard to embedding sustainability factor into your analytical framework. I think this will simply avoid your portfolios to hold stranded assets in the future, whereas some others wouldn't have seen it, or perhaps others would have had a much shorter investment horizon. Third, I think it's important to have this view of balancing the portfolios in general and having all skills for all asset classes, including the private asset class. And fourth, I think again, it has to do with servicing, i.e. being able to be agile in moving from one asset class to another, depending again on the conditions and the framework in which the investor is. But if you look at it historically, Switzerland will always remain a harbor of stability and protection, if you wish, in this respect, not only because of the investment skills that are really embedded into the fabrics of the financial sector here. Imagine a less than 10 million country would never be able to survive in the financial sector if it were only serving its own population. We in the country have served the international community for nearly 2 centuries. So we know about diversifying portfolios across jurisdictions and industries worldwide, perhaps in a way that renders an investment solution or investment provider solutions in Switzerland a bit safer than somewhere else. And the various different crises that we've all lived through, including today, show that in times of difficulties worldwide, usually the reflex of larger investors, families, entrepreneurs, is at least for part of their portfolios and wealth to address itself or themselves to Switzerland.
I want to move on a little bit to your personal journey now, and you've had a successful career, but ultimately, what passions beyond work have guided you throughout these times?
I think there are a few, of course. I've been fascinated by, of course, the ability in general for any kind of skills to evolve and everything that has to do with education. I've had the luxury of being educated in different cultures, in Switzerland, in the United States, and combining these cultures, I think this notion of staying and fostering curiosity at the professional and personal level has always been something very interesting to me. I've always been also interested in making sure a country which is affirming a leadership position in a sector such as finance should have the right educational tools. So that's why I've been quite involved in both vocational education, which is a fantastic advantage of our country with respect to the service orientation to investors and clients, and having introduced schools and new programs for all of our industries since I was a very young professional, and that are still existing today and developing very well. And I've also been involved in discussing with our universities on how to develop high or advanced research programs for scholars and faculty to be attracted to our country rather than stay elsewhere, in order to push the frontiers of our profession a step further. So we have, for instance, through an initiative to which I was very associated with, created what is today the Swiss Financial Institute, which is a very important research facility in Europe, producing some of the best faculties and scholars in our own field of financial and asset management.
And education comes also and through family. And do you believe that the same advice that your parents or your previous generation gave you, you give the same, or does it have to change and adapt today?
No, I think curiosity has to be nurtured. It has to be encouraged, but it has to be encouraged according to the true feelings and, or I would say, intellectual interest of the next generation. And I think today it's very reassuring to see that, for instance, natural sciences have become much higher in the preoccupation, have raised much higher in the preoccupation of the younger generation than before. And this is why firms like Lombard have been able also to attract next-gen talents in these fields that were never to be thought about 10, 20, 15, 25 years ago, which basically have to do with precisely international organizations having looked at standards in nature protection and in climate protection in general, or in natural sciences per se, biodiversity, etc. Lombard has a chief nature officer, which tells a lot about the orientation, but also about the next gen interest in working for a bank or for a financial institution. So I think this has to be encouraged, and education, mind you, comes here also at a very high level of priority. It is necessary to educate our next generation of professionals in these new fields, whether it's a private asset, which is an entirely different set of skills, or whether it's sustainability-linked issues. You have to educate those professionals before they can pretend having convictions from an investment point of view and conveying those convictions to the clients. But you also have to try to educate where the client is being willing, your clients about it. And I think this is why this curiosity and this interest for education that I've always had, from the very vocational to the highest academic, remains very true today. And that's why I think the Building Bridges initiatives has also an interesting side to it, which is bringing the different stakeholders around the same table will, of course, teach them to speak a common language in these areas of so important impact that I think will be highly useful.
And do you think this type of learning, or the vocational learning that you mentioned, or just bringing people, beats or is more efficient today than the traditional way of teaching and learning, which is the teacher and the classroom?
Well, there's a lot of reverse teaching also because of technology, and thanks to technology today, where you come to classes to exchanges and debate, and then you go back home to learn, whereas actually it was the contrary before. I think that you cannot oppose one model with another. You have to combine them. And I think in this respect, professionals have their places also in classrooms, because very often, I would say, because of the incentives of the private sector and the economy in general, innovation takes place faster perhaps than in the academy itself. So bringing those examples of innovations and and perhaps new ways of thinking into the classroom via professionals, professionals' implications in the teaching and educating process is an interesting aspect. That's what we're trying to do at the University of Geneva, for instance, but also at the Swiss Finance Institute.
So you speak, whether it's about finance or about sustainability or about education with great passion, and you build the bridges and blend them and see how altogether they converge into a greater goal. But if there were one of these three that you had to choose today, which would it be?
Well, I think the common denominator of all this is to have convictions, and to develop those convictions. You have to be able to make educated decisions. So I truly think that this educational aspect is of key relevance. To make educated decisions, whether it's in investment or in any other aspect of your life, has to do with how do you get curious enough to inquire about where can I acquire those resources that are needed to have this educated judgment, and how do I take this as a priority in my personal or personal life span and or in my professional career. So offering the choice to the next gen in the tool set or the toolbox that they can have in order to develop those convictions is for me the highest priority.
And if you look at, as a final question today, if you look at how, let's say, the general sustainable theme is moving forward, do you think that there's the same level of knowledge, let's say, in a country like Switzerland from other parts of the world, or is it different?
I think it is developing differently in different regions. Some have been a bit ahead. Europe has been very quick or quicker than the rest of the world in regulating some of those aspects linked to sustainability, perhaps too fast. We see now a simplification trend that is rendered necessary because of the bureaucracy that has invaded some of these universes, and I think it's good that it goes now in the direction of simplifying. Some other regions of the world, such as the Middle East, have had sensitivity for sustainability for long, if not for the Sharia culture that is embedded in the way the decision-making process is made. And I've been always very, I would say, sensitive, if not touched about that aspect, which basically, when I realized that, made me think about, why didn't we earlier think about developing this discussion with some of our friends and counterparties in the Middle East in order to better understand these aspects of their culture, also in the financial decisions. The Far East is developing now pretty quickly in this direction, because the Far East has been perhaps lagging a little bit in this respect, perhaps also because of the more domestic approach to investment that has dominated the Far East financial activities for long until here, and now being international, suddenly the Far East discovers also those different types of ways to invest. And of course, the US has gone through different waves. The states in the US have been quite active in developing criteria and frameworks through which safe, sustainable investments could be made. The federal government has changed its mind with regard to some of these aspects more recently. Nobody said that this will be linear and that we will reach these objectives without deviation. And I think this is one also of the key messages that we will develop at Building Bridges. While some jurisdictions will slow down, some others will accelerate, but globally, the world is, and the train has started and is on its track to reach these objectives in the longer term with regard to sustainability. So I think, yes, regionally speaking, there are differences, but I would say in general, if not also because the new generation and even the existing generation of CEOs and chairmen of any company in any sector cannot allow themselves anymore not to think about the importance of these factors. I think the world is moving in the direction of a more sustainable world.
Patrick, thank you so much for your time today.
Thank you.